The Trump administration recently announced a new proposal proposing that mortgages have a 50-year term instead of the traditional 30-year term. So in this video, I'm going to explore, is the 50-year mortgage proposal a good idea? And I'd love to hear from you as well. If you have some thoughts on this, I'd love to see your commentary below. Let's talk about this because I think it's a very important change being proposed to the mortgage system here. The first thing to know is it's only a proposal. It's just something they're discussing. But just because they're discussing it, should we do it? Well, let's talk about it. First of all, I want to say this is a symptom and not the solution. So the reason card loans, I've probably noticed, have gotten longer and now mortgages potentially going longer is because of cracks in the economy, because of affordability. People just can't afford what they're trying to buy. And so they're trying to stretch it out to make payments a little lower. And so let's talk about how that looks. And more importantly, let's also talk about other ideas we can do to address the housing affordability crisis, because it really is a crisis. But how do you fix it? So first of all, on a $300,000 house, you're talking about a $200 a month savings approximately. And I have an amortization calculator on my website at scarpero.com. I'm going to link to that below so you can check it out at different price points, what that actual savings would be, 30 versus 50. Like I said, it's just a proposal, but you can judge for yourself how much you would save. But to get that $200 a month savings, it adds 20 years of term. You're going from a 30-year to a 50-year. And more importantly, the front loading, the amortization, whenever you have a mortgage loan, the beginning of the mortgage is always more interest than principal, or any loan really. And it makes it even more front load. So you're talking about over 25 years before you're making any dent in the house. So you're not building equity at all. Really, you're relying on hoping that appreciation would make up for that and potentially selling the house for more than you paid. And that could potentially happen, and it might not happen. And more importantly, what happens if you're underwater on the mortgage? So that's one of the things that I really don't like, is that even though there is some savings, you're really going to lose that appreciation, and you're adding a lot to the term. And that $200 savings assumes that both mortgages are the same rate. One thing that one of my mortgage friends pointed out is that most likely the 50-year term would have a higher interest rate than the current 30-year term. We're thinking most likely, if this passes, there'll be a 15, 30, and 50-year options. What we're thinking is going to happen, but we don't really know yet. It's still, like I said, it's all proposals. And so what we're thinking is most likely, if there's a 50-year option, it'll have a higher interest rate, which would actually reduce that $200 savings on a $300,000 house. Here's my other concern, is that most of my peers aren't really talking about, but it is something that we have seen as originators in the real estate field for years and years and years, is it creates a housing bubble. And here's how I know this. Every time rates go down, prices go up. And the reason being is people buy based on payment and not the price. But what happens is people call me and say, I can afford $2,000 a month, or whatever the number is, just for the sake of example. Let's say it's 2,000, so make it even. Then I would say, okay, based on 200,000, here's the amount I can qualify you for. And then they go and try to find a house at that price point. So if you take 200 off that payment, guess what? They're going to start asking for a higher price point. Pretty soon it just escalates, and more people ask for the higher price point. And up until it gets to the number that we're at now, it doesn't really do anything. And basically, we just start bidding higher and higher and higher until the payments are back to where they are now. And so 2 years from now, we'll be back in this bubble, and just with higher prices. And now we're at 50-year terms instead of 30. So I don't really see how that actually helps, because now we're on these longer terms. It's great for the banks, but not for anybody else. So again, people buy on payment, not price. And I already mentioned that. And so there are better things we can be working on. They're not really addressing the real affordability crisis here. There are much better things that the federal government can work on. And unfortunately, they don't talk to us, the originators, because we would certainly give them an earful of much better ideas to work on. And so I want to give you some ideas of what I personally think that the federal government should work on and the state government should work on. And if you have conversation with regulators, or you just happen to know your congressman, maybe tell them, because I don't have that kind of clout. But maybe you do. And if you do, please do talk to your congressman. The first one is not really addressed much. That's mortgage broker compensation for reform. And I know since you're not a mortgage broker, you don't really understand this, but as brokers, we are paid based on a percentage of the mortgage size. But what the problem is that on these lower loan amounts, I'm talking these 110, 120 loan amounts, oftentimes the maximum that we can make on it, it would actually cause us to lose money because we do have set costs. I have to pay my bosses at Edge Home Finance where I work. I have to pay my processor. There are costs. There are fixed costs that are involved. So unfortunately, I have minimum loan amounts because I have these broker compensation rules where I can't charge under a certain amount. And that causes me to have to just tell people, I'm sorry, I can't do your loan because I'm not in the business to lose money. What a crazy idea, right? And so I would love to see some compensation reform from Congress that people would actually understand that consumers are being harmed by us being forced through the regulations to put minimum loan sizes on these loan amounts. Next thing has been talked about for a while now, which is just simply build more houses. Unfortunately, environmental regulations, city regulations, there's this not in my backyard NIMBY whole thing where people are like, I don't want more houses, save the deer and all that stuff. And I get that everybody loves seeing that open green space. But the fact of the matter is there are more people than ever in this country, and we simply need more houses. And more importantly, we need more affordable houses. The problem right now is these builders, they want to build these $500,000, $600,000, $700,000 houses. And even here in Ohio, where I live, a starter home from a home builder, you're talking 400,000 and up. We just bought a new house and we were a little bit over 420 on the house we bought. And that's like base model these days. So the person making that average income is not buying a new house, and that's not good for the economy. I wish they would build lower cost houses, what used to be called a starter home. There is no starter home from builders anymore. And that's a dang shame because they really need to do that. Now, I think there is some regulation and some things they should do. They should study that. I mean, Bill Pulte, who owns Pulte Builders, or is one of the founders of Pulte Builders, is literally in the administration right now. So he definitely should know what they need. I don't know why he hasn't done anything, but he should know why there aren't $200,000 new houses. They just simply aren't there. And so definitely build. Next thing I want to see personally is renovation loan reform. So, and you might not know this if you've never taken out a renovation loan, but the 203K program or the Fannie Mae program, those renovation products, they require you to hire a contractor to do the work for you. And you might be thinking, well, I want to hire a contractor, and that's fine. If you want to hire a contractor, that's fine. The problem I see is there are a lot of just handy people that could buy that $50,000 house and fix it up themselves. And they'll call me and say, hey, I want to buy this house. I want to fix it myself. And I'm like, I'm sorry, I can't do that. And they're like, why not? Because of the way renovation products work, they have to go through a contractor, which of course adds cost to it. So I would love to see some reform that says, you know what, you're a handy person, you know how to fix up this house. Let's give you a chance to do the work yourself. And win-win, we get some of these junker houses off the market. And that person that's super handy can fix a house themselves and have a place to live. I think that would be a great idea. Win-win-win all around. Next thing I'd love to see, especially here in Ohio where I'm at, is property tax reform. Right. So especially for disabled veterans and seniors, there's something called the homestead exemption. And I'm all for the homestead exemption. I think the disabled veterans should be able to get their property tax discounts. Seniors, they're on low incomes on Social Security, they should definitely get those property tax discounts. The problem is that our discounts are horribly low. They created this program 25 years ago or 30 years ago, and that $50,000 discount. And so here in Ohio, where I live, what they would do is take 50,000 off the value. So, for example, the house is worth 300. They assess it as if the house is worth 250, which, okay, it's a little bit of a discount. But, when they did this 25 years ago, when the houses were 100, you're going from 100 to 50. So you're getting half price on the taxes. Now that discount's not very much, and they never updated it. And a lot of other states are the same way. I wish we'd take the lead that Florida and some of the other states are taking, where they're like, you know what, we're going to wipe out property tax completely if you meet these guidelines. And I think that would do a lot to help people stay in their homes. And so I'm all for that. I would also like to see insurance reform. I've heard of people in Florida and some of these places, all these hurricanes happening where there's just a lot of messes going on. If you talk to anybody in Florida, and I have done some loans in Florida where the property insurance has just gotten so catastrophically high because of hurricanes and all that kind of stuff, that there is some reform needed because these premiums are messing up everybody. And so definitely I would love to see some reform in that area as well. And finally, I want to talk about something called the Helper Act. I've talked about this a couple times on my channel. And the Helper Act is basically where there's a proposal, and my friend Sam Royer is one of the people in charge with us, where they are trying to create a new program where there are zero down FHA loans. And so it'd be through the FHA program. It'd be a zero down loan. And it would expand FHA's zero down program to include teachers and firefighters and medical professionals and those kind of people that are helpers and heroes. And we create a zero down program for those people. Like I said, it's just a proposal. I think it's a great proposal. I'm going to link to it in the description below if you want to support that program. I hope you click on their link and support it. So there you go. There's some info about the 50-year loan, or the potential 50-year loan proposal. Now I'd love to know what you think. Comment below. Tell me more what you think about this program. I'm also going to link to my website. I actually have an amortization calculator on my website where you can compare different payments on different loan amounts and see, and maybe the 50-year mortgage is for you once it comes out, and that's fine. I don't judge. I'm just telling you my thoughts on it. As always, any questions about mortgages or anything in particular, feel free to give me a call. My number is 937-572-3713 or scarpero.com. Talk to you soon. Bye.